Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for December 11th, 2018. And with the market still within the dawn spots, the gravity spots, so levels, mainly 2626 over here at 2682, all the way up to 2811. We had a pivot reversal just recently up away from the little hidden spot, 2575, but nonetheless, we are still playing within our sideways grid. But that's not the focus of tonight's video. I want to discuss some financial stocks, especially key financial stocks, near or at new 2018 lows, or making new 52-week lows, as we'll be seeing from a scan. But just the bigger picture does show us a potential bounce pathway up away from 2626. So if you do want to be aggressive and try to play a bounce, well, maybe some of these stocks could be a way to do that, or it's just showing you the overall weakness in the financial sector. Let's start first with a look at the XLF ETF. Now it's down there at new 52-week lows. And from prior videos, prior evening videos, we can update our trend lines. And that does take us to where we are at about 2460. And that is a spike reversal pivot. We are actually just beneath that trend line. We're beneath it on high bearish volume. Well, that's not good. If you're thinking that's going to be a long-term buy spot or a long-term reversal play, that's not usually how it works. Bearish volume tends to go with bearish price, and that is a sign of weakness and potential lower prices yet to come. And there, of course, are multiple examples of that. Volume does go with price. Now, given that the XLF has been in a downtrend all year long, lower lows, lower highs, lower lows, lower highs, and of course, our horizontal pivots, 2850, 2750, 2650, those may be best described as declining trend lines or falling parallel trend line channels. And again, our 25 per share spot worked on just a moderate bounce. It failed this week. All right, so what we'll do is pull in a scan criteria, and this is from our scan tab, and mainly looking at 52-week lows. There are multiple ways to find new 52-week lows, but I want to draw your attention not so much to the individual companies, but the industries. So the industries that we're looking at are energy and oil and gas. Well, that makes sense in the context of crude oil falling from about 75 per barrel all the way down to 50. And that's where crude oil rests at the moment. The rest are scattered except for insurance and what we'll focus on tonight, banks. So in the S&P 500, 1, 2, 3, 4, 5, 6, 7. 7 of those new stocks making new 52-week lows or new 2018 lows are in the banking or financial sector. They include big names like Wells Fargo, and if you Regions, Zion, SunTrust, Citizens, Huntington, KeyCorp, etc., we'll compare those with our big ones, Goldman Sachs, Bank of America, and the like. We'll mainly just start with the look at each one of these. So Wells Fargo takes us in that same little trend line channel that we have on the XLF. I'm going to connect the dots, connect highs to highs, even goes lower than that, and not as quite as easy as a task as it may look, connecting out lows, lows, maybe not the best way. We can do a parallel trend line channel here and see how that affects the price. Well, not a lot you can do with that, right? Essentially saying Wells Fargo remains in a persistent downtrend and price is beneath our horizontal levels and now the falling vertical downtrend channels. The purpose of this video is mainly to talk about the overall weakness in financials and that is not a good thing if you're a bull on the equity market, and the fact that financial companies are weak, getting weaker, that also is not necessarily a good thing for the broader economy. We're still in a rising rate environment, and we do expect the Federal Reserve to raise rates shortly in December, but still keep focusing on financial companies as a sector, and they continue to get weaker. So if you do want to play a fade position, fade just means going long into a proposed support level. You can do that with calls, with in-out spreads, or other ways to sell premium beneath where you think the market's going to bounce, and that would be for Wells Fargo, about 48 per share. So going out and selling distant premium at about 47, 46, 45, 44, and lower. We can do that just looking quickly at are probability of expiring daily cones. And we'll just pull Wells Fargo into the grid. I like to update these probability levels, which are the yellow are the 1 standard deviation, and the white, that's 2 standard deviations. Option premium comes into this picture, and of course it's the probability of expiring. I like to go ahead and do something like this, which is to extend operating trend lines. If you draw trend lines, and that's not the perfect one necessarily, but maybe horizontal ones, connected, in this case, just above 50, 53, and above 56 per share. And we think that the market could bounce. We think that may be the low, or at least an inflection point before the downtrend continues. Well, that could be a spot to play any type of bounce maneuvers. Do be careful and do use protective measures or hedges, because if these stocks start to fall, we may have situations like what's happening now in FedEx or other examples where a failed support level led to a massive liquidation and a high volume at that. So keep that in mind as we look at these individual companies, and we'll just breeze through them quickly. So the other one next would be Regions Financial, and we're just getting a picture of where they are, any type of opportunities to play, and I think mainly looking at any type of trend line that we can draw collectively. So still we see, and that's, even in this one, it's beneath the trend line levels. You can extend this as well, and we're beneath all those. Sure, time for a pullback. Sure, time for a snapback. But do you want to play that in terms of risk reward? So factor 1 of the video is thinking about how the financial companies are weak and what that means for the broader economy and thus the equity market. And then factor 2 is, shall we play a bounce or just let these things retrace and then short on the pullbacks? KeyCorp, financial company, similar to Regions and others. And then we have Huntington Bank Shares, HBAN, also at 2018 lows. Citizens Financial has been in a persistent downtrend with weaker prices and bearish volume all the way through 2018. SunTrust Banks stabilized and actually made a 2018 high into August, but then has fallen from the 75 per share level down to where it is currently at 54. Zion Banks is the last one we can take a look at, and it is again downtrending. Maybe we could draw an easier trend line here for Zion Banks. And the main point, of course, for trend lines, keeping it simple, is that the markets, when in a falling parallel trend line channel, tend to go from low to high, not quite perfectly nonetheless, but high to low, low to high, didn't quite get there, and eventually high to low. Projection would be for some type of rally up away from support pivots into the near-term future. And we'll finish by just looking at a few other bigger financial companies. Goldman Sachs, new 52-week lows. Bank of America, new 52-week lows. And the list goes on. JP Morgan, new 52-week lows. So certainly be careful. Take all these levels into consideration. These big bear or sell candles on high bearish volume may be a little bit surprising in how rapid it occurred. But the fact is that it did occur, and we will be watching these closely, TheoTrade, into the future. This is Corey Rosenblum with your Theo Nightly video for December 11th, 2018.